So, hello everybody, and welcome to this, the inaugural vodcast of Paul Shamplina and Russell Quirk's Property Odd Bods, Shamps and Quirky Property Odd Bods. It will be here on Known From. What we want to do is to provide you this wonderful information fest really on the property market on a regular basis. We're going to shoot it on a Friday. We're going to talk about the week's property news. We're going to maybe have a bit of a tussle, aren't we, Paul, in terms of a bit of a difference of opinion here and there, a bit of banter, and produce it for the weekend when, of course, there's a dearth of property news, unfortunately. So, Paul, welcome. How are you, mate?
I'm all right. I'm good. What are we now? We're week 8 of lockdown. I don't know. I've lost track, mate.
Week 50 something of lockdown.
Who knows?
Yeah, no, I know. It's it all does kind of blend into one big blur, doesn't it? But so look, should we kick off and talk about, I guess, look, the headlines of the week, I suppose, shall we, in terms of what we think of the big stories? For me, the big story has to be, as you say, after 8 weeks of the property market being cryogenically frozen, we were kind of unleashed, weren't we? And Robert Jenrick, the housing secretary, said basically, yeah, the lead is off. Estate agents go forth, and that's what we've done. So quite a revelation, don't you think?
Well, it is. I mean, it's now official. You know, from the market being frozen, it's now officially back open. I know from driving around yesterday, I saw 4 agents open. I saw a few still closed, but it's good. I mean, you know, now we can do the viewings, we can do the valuations, we can do the inspections, the move-ins. You know, it's good news.
Yeah, and a lot of people have said, and you've probably had this in terms of your media appearances this week, you know, a lot of pundits have said, well, why estate agents? You know, why you first? Why not retail? Why not coffee shops and so on? And I think, look, rightly or wrongly, and I know estate agents, obviously, we will get a bit of a bad press, but we do have our uses, frankly, and particularly when it comes to being stewards of the property market. And in my view, the property market really underpinning the wider economy. And I think, look, if we want to pull ourselves out of this economic nosedive, which coronavirus has kind of forced us into, it'll be the property market that helps to lift us out of that, don't you think?
Most definitely. I mean, it is. It's about gaining confidence. I mean, some would argue, well, why estate agents opened on the 13th of May, and hairdressers have got to wait until July? When there's a lot of women's hair that are a little bit unkempt, and they think that might be a bit more of a priority. But I agree with you, Russell. It underpins our economy, and we've got to get things going again. As to how quickly sales are and the transactions actually complete, I think they're going to take longer, but we need to start getting confidence back.
And certainly all the data seems to be from software businesses, agents, and portals that things have really started off very swiftly indeed in terms of return of activity, certainly from a buyer inquiry and a buyer traffic.
Well, yeah, I mean, definitely. Well, according to Andrews, they said they had 226 inquiries within the first hour of opening from their 48 offices from prospective buyers. Yeah. You know, which sounds a lot and it sounds very encouraging, but who knows?
Dare I venture there might be a bit of PR in that, Paul, but I think we had similar from Chesterton's, didn't we, that they've been largely unaffected really by coronavirus. So I must admit, I take some of that with a bit of a pinch of salt. Of course, we've been affected. I think it's now all about how we recover, how quick we recover, and of course, look, being sensible when it comes to PPE and sanitisation, social distancing on viewings and so on. So what's your headline of the week, mate?
Can I just say, you're a bit cynical, aren't you, Russell?
Yeah.
I'm only joking. So the other headline of the week is the tenants, the London Tenants Union Renters Association, where they're doing loads of campaigning. They did a campaign for Dorchester Court in London to demand that the landlord, Manaquet Limited, offers rent reductions and repairs issues of properties. And quite rightly, if there is issues at a property, there needs to be repairs carried out, essential repairs carried out as well under the guidance. But the new Economics Foundation, the think tank, which is part funded by Nationwide Building Society, literally today said rents to be completely suspended during the virus, and landlords can be matched by having mortgage freezes. You know, let me just give you one case study, Russell. I spoke to an agent on Tuesday. He manages 1,000 units. A little bit of his stock is student lets, and student lets is going to be the biggest market affected in HMOs with regard to non-payment and vacation of tenancies early. He had 30 students refusing to pay the rent because their university had told them don't pay the landlords. Crazy.
let's get this right. So there's an association calling on all rents to be waived in London, right? All of them, yeah, which is millions of rents, no matter how someone may or may not qualify in terms of financial hardship. So anybody's rent should just be waived. Is that what they're saying?
Well, that's what they're saying. They're saying that, I mean, obviously, what they brought out guidance. They said about a rent holiday and a mortgage holiday. It's actually a deferment. So I know the government have changed the wording on that. And that was the spike of all these comms coming out. Let's be very clear. 90% of landlords out there only have 1 and 2 properties. You know, there's this myth that landlords have got all this money. I mean, I speak to landlords, and my team at Landlord Action speak to landlords daily, and they are struggling.
Yeah, I saw some stuff on social media this week, actually, that I think might be related to what you're talking about. And the word in the tweet, and it was from an organisation, not just an individual, was words to the effect that, you know, it doesn't matter to landlords. In fact, it doesn't matter to greedy landlords and their profits. And you're dead right. You know, this myth, this fallacy that, you know, all landlords are multi-billionaires and they've got hundreds and hundreds of properties and they're treating all their tenants terribly. I mean, the opposite is true, isn't it?
It's complete rubbish. I mean, it really is. I mean, a lot of, I mean, the encouragement we're giving, obviously, to landlords is work with your tenants, do deals. I mean, the NRLA came up and said over 40% of their members have worked with their tenants to try and sustain the tenancy. Bearing in mind, the courts are suspended until the end of June. You're having to serve 3-month notices. I mean, at the end of the year, the courts are going to be slaughtered. I mean, we've got 500 to 600 cases stuck in the court system that are suspended, and they're landlords that had cases prior to COVID-19. They're affected, and they can have rent arrears for over 12 months. I mean, I see struggling landlords. I have landlords crying down the phone to me, seriously. It's quite tragic. So, and landlords have been affected financially by COVID-19 as well. They've been furloughed. They've had to apply for universal credit. Everyone's in it together.
And of course, landlords have been sort of kicked repeatedly over the last 2 or 3 years by ill-fitting government regulation repeatedly, haven't they? Should we talk about I've got some other news that I want to try and get to, and it's the first bit is a bit of breaking news from Nigel Lewis at The Negotiator, and I'm going to use the word allegedly a lot here, I think, Paul. What Nigel has broken is that one of our larger estate agency businesses, Spicer Hart, you know, which obviously is also Darlow's and Felicity J. Lord, he's picked up on what I think is a leak or a rumour, whatever you want to call it, that Spicer Hart might, in the not too distant future, be about to completely change their model, which will not require the 120 odd branches that they've got. He's reporting, and again allegedly, that the plans internally at Spicer Hart are that they actually go down to about 40 branches and start to turn all their agents into self-employed, so a bit like a Keller Williams model. Now, it was very interesting when I read the piece this morning. Normally, Paul Smith's a bit like you and me. You know, he's not short of a voice or an opinion, is he? Today he was uncharacteristically quiet when asked for comment. No comment, he said. Now, that would be quite a revelation. I mean, in a positive way to a degree, that at least at long last, in my view, we've got a large estate agency business seeing the writing on the wall and reacting, pivoting. But I guess there'll be potentially a lot of people at Spicer Hart watching this and reading that piece that might be a bit concerned. Well,
definitely. I mean, if you've got, you know, over 100 offices and all those employees, you know, job security during this time is really, really imperative. And I think, obviously, you know, with regard to the corporate model, that's changed. I mean, obviously, you know, all businesses, not just, you know, Spicer Hart and corporates, all businesses, when they come back out of this, are totally going to change with regard to their costings, with regard to their personnel, with regard to the type of officers they have and how they act and how they carry out their customer service. So, you know what, a lot of what's going to happen with these companies, it's all going to be about cost cutting. I mean, I saw TUI, the travel company, they said that they're going to cut, they want to cut costs by a third, I think it was. So, you know, it's about cash reserve, isn't it, at the end of the day?
It is. And look, a lot of these big corporates with their overheads, which obviously they're famous for,
massive.
Offices, copiers, people, whatever. They've also, a lot of them have taken on a lot more debt. You know, Countrywide, 110 million quid indebted. Foxtons, famously for years, had no debt at all. And by way of a kind of a special resolution or a special move that I think was enacted by the management team last week, they went and took on over 20 million quid's worth of debt. And you know, that's a very poignant and compelling event, I think. So it'll be very interesting to see, indeed, how corporates react. Anything else that's stood out for you this week?
Yeah, well, I think, before I come, I want to do a feature. I mean, we'll do a couple more stories, and then we're going to do a feature of a foreign property story just in a minute. But the real sad story of the agent Chelsea Dick, who was unfortunately passed away. She was from Lowestoft and she worked for an estate agent called Howard's Estate Agency. And Michael Smith, the manager, gave a really moving point message about her working there. It was a really, really sad story.
Well, it's good that he's paid tribute and that you're noting it. So
yeah, no, definitely, it was very sad. And also, I think I did note, and I know you want to talk about mortgages in a second, is the Mail Online saying about the buyer's demand, and that buyers now are asking up to 20% discount with regard to carrying on and completing a purchase of a property, using COVID-19 as the excuse to be able to try and hammer out bigger discounts.
Can I just say, bless them? I mean, look, you can't blame buyers for being a bit cheeky and chancing their arm, but look, in my view, there is absolutely there's no warrant to that. There is no substance to be able to even indicate for a second that the property market, property values are going to drop by anything, let alone 20%. That's simply madness. The fundamentals of the market, I think, remain strong. Cheap unemployment hasn't shot up yet, thanks to the furlough scheme. And don't forget, we are a nation. I know we're a nation of renters from your point of view. That's your specialism, but we're also a nation of aspirational homeowners. And anyone that thinks property prices are going to drop 20%, I'll have money with you that does not.
Yeah, but Russell, you've got to see the other side of the coin. You're an estate agent. You're going to big up the market. Everyday Joe that's going for a transaction. Okay, there's job insecurity. They reckon unemployment's going to go to 8-9%. Okay, furloughing is going to be to the end of October. People don't know where they're going to be. Sellers, let's face it, the market's gone like that for years and years and years. Sellers will be more realistic. And actually, if they think that this sale's going to fall down, and they don't know how long their property's going to go in the market, and of course, lending criteria, we're going to talk about mortgages in a minute, it's going to change. Why wouldn't a purchaser try it on?
Yeah, well, I don't blame them for trying it on. I guess what I'm saying is that there's no merit in their argument that prices have dropped
at the moment.
Well, but I think, for prices to drop, you need a number of things to happen. And in previous recessions, we've seen massive unemployment that's driven property prices down. We've seen massively high interest rates like we saw in, let's say, the late 80s, early 90s.
They're rock bottom now.
Yeah, and of course, those things just don't apply. Those fundamentals do not exist right now. And I think there's so much pent-up demand. We saw, you talk about the market going like that. It kind of went like that, and then it's leveled off a bit, I think, the last 3 or 4 years. But a lot of that was because of Brexit and the uncertainty, the anxiety around Brexit.
Brexit? That's a distant memory, isn't it? It
hasn't actually happened yet, of course. So
you haven't talked about Brexit in the last 3 weeks. That's a miracle, Russell.
I was on talk radio this week, for Julie Hartley-Brewer, and I couldn't resist but mention.
Oh, right, okay.
She loves it. So look, look, you might be right, I might be right, who knows? But look, yeah. I'll have 100 quid with you to a charity of your choice that in 12 months' time we do not see house prices. And let's choose an index. Let's choose the nationwide, because you mentioned
yeah,
nationwide index. 12 months' time, property prices will not be lower than they are today.
Deal done.
Take it back,
right? Deal, yeah, this is noted for our viewers. 15th of May, 2021 is going to be D-Day to see if the market comes down. I think the market will come down a bit. I think there'll be a correction. That's my point. And we can talk about that after. But talking about mortgages and lending, what have you got news for us, Russell?
Well, I think, again, on the doom and gloom front, a lot of people have been saying, I talk about fundamentals in terms of the housing market and those fundamentals changing, and then that changes, the imbalance between supply and demand, and then has an effect on price. One of those fundamentals is the cost of money, but also the availability of money. And what some people have been saying to me this week is, that you can't get a mortgage. And in the last 2 weeks, now that the dust has settled a little bit insofar as lenders, it seems that not only is there appetite by lenders to lend, in fact, there's been literally in the last few days a whole bunch of 75% loan to value buy to let products released. There's a whole range of 95% loan to value first time buyer products out there. But actually what we've seen this week, the Nationwide being one of them actually, is mortgage values reducing. So I think lenders are actually keen to lend. They're getting ready for almost a bit of a competition, a bit of a mortgage war, I would say. So I think in terms of that kind of that central limb to what props prices up, we're certainly not going to see interest rates go higher for probably a year or two at least.
Yeah, I agree with that.
bank rate 0.1%. You can still fix a mortgage at below 2% from a 3 and a 5 year perspective. So I think money will be available, money will maintain its cheapness, and those two things alone will again help to prop up the property market. So I guess I want to bust the mortgage myth, Paul, really, that, you know, anyone that's saying on the news, oh yeah, but there's no money about and the lenders aren't going to lend and mortgages are going to be expensive. It's fundamentally untrue to say that.
Yeah. I agree with that, and I think there was the shock factor of us doing the lockdown, then everyone pulling, and now people are coming back in. I mean, I read Paragon have brought a whole range of products out as well.
Yeah. Did you have you been on foreign climes this week in your in your internet travels, Paul, by any chance?
Well, yeah, our internet. I would love to get on a plane. I don't know how that's going to work as well. You know, going on planes further down the line, you're going to have the distancing rules and masks and.
You'll just jump on your private jet.
Yeah, I will do. Yeah, I've got a place in Mijas Costa actually, and I'd love to go out there. Obviously, Spain are out of lockdown now as well. So, but their lockdown was a proper lockdown, not like ours. I thought I'd kick it off. So we're going to do a feature every week, a foreign property story, and I went for something. Russell, what's the most expensive residential property in the world? Forget about Buckingham Palace because that doesn't count with the Queen. What's the most expensive property and where is it?
Well, apart from your house.
Apart from my house and your house, of course.
So, all right, let's think about this. So London is one of the top 2 or 3 places in the world for property on a per square foot basis.
Yeah.
Kensington Palace Gardens have got to come pretty close, isn't it? The likes of Tamara Eccleston and John Hunt of ex-Foxton's fame. You know, there you can't buy now for much less than, 400-500 million. So it's got to be a London or a New York property, I would imagine.
You're totally wrong. It is in Mumbai. It's worth $2 billion. It's called the Antilia. Okay, it's owned by Indian billionaire Mukesh Ambani. And shall I tell you what he's got? It's got 27 stories, 173 metres tall, 49,000 square feet, 3 helicopter pads, 168 car garages, a ballroom, 80-seat theatre, terrace garden, spa, and a temple as well where you can do some praying. But I saw a picture of it and it looked really ugly.
You've got to ask yourself why, haven't you? Why do you need a house that's in effect a hotel?
That's a good question. We may never find out, Russell.
It wasn't like the old Everest thing. Well, you know, I suppose if you're a billionaire, it's why not? Just because I can. And it's a bit of willy waving, I suppose, isn't it? You know, biggest yachts, big houses, and so on.
I love that analogy. A bit of willy waving. I mean, that's a great thought for our viewers to see on a Saturday morning when they're eating their Cocoa Pops, Russell.
Well, it's funny, isn't it? We want questions, don't we, for next week and the week after and so on. So, try and keep them fairly sensible, despite what.
Yeah, okay. And actually, on the question point, and this is going to go out to the viewers, obviously, the following week, and we're going to be doing this every week. If you have got a question for the next, what did you call it? Vloom? I can't vlog. What I get
a video blog, isn't it?
A video blog, yes. You can obviously tweet Russell. Russell, your Twitter address is?
Just at Russell Quirk.
Very easy. And I'm at Paul Shamplina. Any questions for the show, let us know. But we've got a few pre-asked questions, which we're going to do at the end of each show. And this is to you and myself, but I'll ask it to you now, Russell. What's your view on where the market's going to be when we come out of this lockdown and in the summer, and where we're going to be in the next 6 to 12 months in the market? What's your view, Russell?
Well, I guess, you know, we kind of covered it insofar as that bet that I'm going to win in a year's time.
Which I'm going to win.
I am an optimist, and it's. I mean, I know you referenced it earlier, but it's not just because I'm an agent and I'm biased. I mean, I just, you know, I look at the data and I look at history, and you know, I can't see that we're going to have huge supply and no demand, and therefore driving prices down. You know, we're not going to end up with 20% unemployment. We're not going to end up with 10% interest rates. So I think fundamentally it's going to be okay. And I think what's fortunate is that we did start 2020 insofar as the first 3 months very strongly in terms of buyer demand, buyer inquiries. You know, as we've said, time will tell, but I'm optimistic, and I think the data insofar as initial inquiries, certainly this week since the shackles came off the property market, all the indications are that buyers are kind of chomping at the bit. They want to buy.
I disagree with you to a certain extent, because my view is I've worked in recessions, I've collected money, and I mean, Germany announced they're officially in recession today. We're still midway through this quarter, so we need to obviously find out where we're going to be at the end of June. My view is I think the market's going to come down a little bit, maybe 10, possibly 15%. I think there's going to be opportunity. You'll see landlords that are going to be looking at selling. I think rents will come down a little bit. What I'm saying is there's uncertainty with regard to job security. I think that there will be movement in the market. I think sellers will be a bit more realistic, and I think that prices will come down a bit. And I think with regard to landlords, if I talk my landlord cap on, you will see that the small landlords, who have been exiting over the course of time. You've got the banning of Section 21 coming in. You've got some other rules and regulations coming in. I think the smaller landlords might need for liquidity because of their own personal circumstances, need to cash in their chips, which offers opportunity, obviously, for investors that have got cash as well. I think landlords are going to worry about void periods and about what type of tenants they take on in the future. I see a lot of, I see the government really looking at big initiatives with regard to social housing, which has been neglected for years. I don't know where they're going to find the money, but I think that's going to happen as well.
Or a bit more. Do you know what happened in the 1980 recession, which was a 5 consecutive months of GDP negativity, so a proper recession. What's a recession? It's 2 consecutive quarters of GDP.
2/3, I think, yeah.
Yeah. So that happened at the end of 1980. Do you know what happened to house prices? They went up 8%. So I don't think necessarily just because we're in a technical recession that it means that house prices have to drop. But anyway, you and I will disagree
but on that point, let me just on that point, Russell, because I was literally on the ground. I was 18 years old, many moons ago. And when I worked in the solicitors, I was doing house repossessions in 89, 90 when the interest rate was 15%. You're right, high interest, high unemployment. We don't have that. But then you look at the 2008, where it was cheap money, 120% mortgages, and the mortgage and the unemployment rate was low. That was a different global recession. Now we're in a different type of recession. But our saving grace is interest rates are on the floor.
We'll see. Let's see. I'm rubbing my hands at the thought of what to spend that £100 on.
But you said it's going to charity.
Oh yeah, no, of course, yeah. Sorry,
Yes.
I've got a charity.
Yeah. It's not the Russell Quirk charity. I've got another question for Russell. Okay, this is from Daniel in Berkhamsted. How will estate agents change their businesses when they come out of lockdown after summer COVID-19, when we've started slowly getting back to normal?
So we talked a little bit about what we think the corporates will have to do in terms of cutting their cloth according to some lean times.
But the independents.
Yeah, look, the independents, to me, independents are always more agile than the corporates. They can move quicker. They've got more skin in the game, and they care a bit more, really, because it's generally their business. So it remains to be seen, I suppose. But in the short term, of course, agents are going to have to get their heads round making sure that staff are protected and that sellers and viewers are protected in terms of the guidance around PPE, sanitisation, and social distancing. So I think, but look, let's hope for all our sakes that's short-lived in terms of that being necessary. I think if we look at agencies. And bear in mind, I don't want to make a prophecy here, because I think I did famously make a prophecy back in about 2012 that online estate agents have 30% of the market, and that, wow, God, I was way out. But
that was a Gerald Ratner moment in the property world for you, Russell.
I don't know. It was based on looking at all other sectors insofar as how the internet had disrupted those other industries, really. But anyway, I do think that we will see, unfortunately, a reduction in branch numbers. And again, look, it's happening. We've just talked about the Spice of Heart speculation. We know that Countrywide have closed branches. We know that LSL closed 100 or so. Even Connell's closed a handful. There's going to be more branch closures. I think there'll be a realisation that estate agency now is not about the brand above the door. It's about the individual in the agency, the personal brand, and how those individuals operate in terms of the client care they give, their way of acquiring customers, I suppose. So I think the landscape will change. It'll just end up being a bit more US. Because I think that service level needs to increase, but also just because the overheads simply are not sustainable for the likes of Countrywide, LSL, Foxtons and others.
Yeah, that's a good point. Before I take the last question, which is about me and rent arrears, one thing that I have predicted, and I did it in week 2, week 3 of this lockdown, and I see it, and obviously I used to be a bailiff as well, is the commercial property market is going to get hit a lot harder than residential property market, without a doubt. You had the high street and obviously pubs, clubs, hospitality, which have absolutely been slaughtered and can't reopen until July. Half their, their premises, they've got to have half the clientele in there. The distancing in a pub, can you imagine that in social distancing? And the hospitality, and actually they were struggling in the high street beforehand. And you will see a lot of businesses not coming back. You'll see that head landlords, at the moment, they can't gain possession because there's a suspension in distress. I'm being contacted by a lot of commercial landlords, and they will get hit a lot harder than residential landlords.
And we shouldn't be surprised. Look, retail's been on the ropes for years, isn't it? So now, as a consequence of COVID, look, you would not want to be a retail or commercial landlord, because rents are going to reduce, voids are going to increase, the value of your assets going to reduce. Not a good time.
Not a good time. And then the last question is to me from an agent called Paul in London. Do you think rent arrears and evictions will rocket up? Well, the simple answer is yes. There is a court suspension at the moment to the end of June. The government brought in a notification that you've got to serve the notices you serve, the Section 8, Section 21 or 3-month notices. We've got 500 to 600 cases stuck in the court system at the moment. We know that after summer that we will get really, really busy. How the courts will cope is a different story, but they are bringing a new process in called pre-action protocol, where landlords and agents have to engage and try and do prepayment plans with tenants before you issue a claim. It's all about the mediation now. So yeah, unfortunately, yeah, it will rise, but there is extra protection for tenants. But as I said, landlords that have got cases in courts now, they're the ones going to get hit the hardest, because instead of 5 months to evict a tenant, it could take 12 months.
Yeah. All right. So look, that's all the serious stuff. Shall we end on a light-hearted note? Should we?
Yes, go on.
We should end every week with I think what we're going to call our Prize Property Plum.
Right. Okay.
And this is this week, because obviously I've just kind of mentioned it, I suppose. I'll tell you what mine is, but maybe next week it's your turn. Okay. Which is a light-hearted dig at something or someone in the property market, the property industry this week, that we can have a bit of fun with. So I'm going to try and share my screen here, and just you have to tell me that this works. Paul, bear with me a sec.
It's not a dirty picture, Russell, is it? Oh no.
Can you see that?
I can, yes. Is that an office?
It's not the best picture in the world, because it's obviously been taken on a mobile phone. So right. We talked about social distancing and PPE earlier, insofar as estate agents having to take measures, and in fact being forced to take measures in terms of new government guidelines around how estate agents should operate. This is, and I won't mention who it is, but this is a certain corporate estate agent's effort insofar as PPE. Can you see it? I don't know if you can see my cursor.
Yeah.
Basically, it's a little sheet of plastic on a stand that looks like a brochure stand, something that's been taken out the window, that has been placed on the neg's desk. And it's now supposed to protect both the agent and the client that comes into the office from coronavirus spores. I mean, mate, it's pathetic. And I thought this was a joke, but as I understand it, this is not a joke. This is what a particular corporate is seeking to do insofar as their PPE efforts. And I do say, let's just say, make a bit more effort.
Yeah, I'm sure there'll be a lot of bigger effort going forward.
Yeah, and as I'm not going to mention who it is, but so yeah, don't bother anybody DMing me and asking me. But anyway,
yeah, that's a good idea, Russell. At the end of each show, we should do Prize Property Plum of the Week. But we're just jesting. We're just having a laugh.
We are having a laugh, and it'll be just a light-hearted dig. And some weeks it might even be me or you. Who knows?
Yeah. I am normally called a plum.
Look, mate, this has been fun, and look, this is kind of property TV in lockdown, I suppose. So look, hopefully people will enjoy whatever this ends up being in the edit, 30-35 minutes of property banter between two people that kind of know a little bit about property, I think it's fair to say. So until next week, mate.
Lovely, brilliant. Let's do it again.
Cool. All right, see you then. Take care, mate. Stay safe.
Take care. Bye.